All right, welcome to The Explainer. Today, we're digging into some pretty serious financial allegations against the nonprofit Turning Point USA. And to do that, we're going to be breaking down a really detailed investigation from the YouTube channel Wolves and Finance that takes a hard look at the organization's public tax filings. Okay, so right up front, we have to get something out of the way because the framing here is, well, it's unusual. The source we're looking at, this Wolves and Finance channel, bases its entire investigation on a fictional event, the murder of TPUSA founder Charlie Kirk in September 2025. Now, to be crystal clear, this absolutely did not happen. It's just a creative, kind of morbid narrative hook the analyst uses to dive into some very, very real financial documents. So, this fictional narrative gets rolling with a memo, supposedly written by Charlie Kirk just days before his death in the story. And in this memo, he apparently demands a Doge-style audit of TPUSA's finances. And that strange request, that's what becomes the catalyst for this whole deep dive. So, this immediately brings up a huge question, right? What in the world is a Doge-style audit? And how is that any different from the standard, normal annual audit that, every nonprofit is supposed to have? Well, this source points out that as this whole fictional audit idea was being discussed online, a figure from Turning Point, a guy named Tyler Boyer, he pushed back on it. He basically said, hey, there's no need for any of this. His point was that the organization gets audited every single year and that their public 990 tax forms lay everything out in the open for everyone to see. Okay, so let's take that advice, shall we? What did the investigation actually find when it went and looked at those very same public 990 records? So the very first thing the source flags, it has to do with the tax filings themselves. For the 2024 fiscal year, the main form for Turning Point USA, that one was filed, but the forms for three other related groups, the Endowment, Turning Point Action, and America's Turning Point, they were all reportedly missing. Now, you might be wondering, okay, so what? Maybe they're just late. But according to the source, what makes this really stand out is that it's a huge break from their usual pattern. In the past, all four of these forms were apparently filed together on the exact same day. So this sudden change, where three of them are missing, that gets flagged as a pretty significant anomaly. So let's dig into that one form that is available. Inside that document, the source uncovers a grant for over $8.5 million, and it was paid out by Turning Point USA to one of those other related organizations. And here's the kicker. That massive $8.5 million grant, it went to America's Turning Point. Yep, exactly one of the organizations whose financial records for that year are missing. So what you have is basically a financial black hole. A huge amount of money goes in, but there's no public document showing where it went or what happened to it. So this complete lack of documentation, it leads the investigation to its next major puzzle. And it's something the source calls the salary paradox. And this slide really lays out the paradox perfectly. So get this. On one hand, you have America's Turning Point, which reported having 0 employees. 0. Yet somehow it spent millions of dollars on salaries. Then, at the very same time, its parent organization, Turning Point USA, cut its staff by 1/3, but its total salary expenses actually skyrocketed. How does that work? This source argues that these two things they don't add up. So what's the possible explanation here? Well, the analysts who put this report together, they offer a theory that the money is being paid to ghost employees, fake people on the payroll. That would explain how an organization with officially 0 staff could somehow have millions in salary expenses. But okay, hold on a second. This brings up a pretty obvious question, right? What about the auditors? Wouldn't a professional accounting firm, the people who are paid to check this stuff, catch something like ghost employees during their annual audit? And you know what? That is a totally fair point. The official audit, which was done by the accounting firm Baker Tilly, did give TPUSA a clean opinion. And what that means is that they didn't find any major material issues in the financial statements that they looked at. But then, the source introduces a really interesting piece of outside context. It points out that this very same audit firm, Baker Tilly, is actually being sued right now by a different nonprofit client. And that lawsuit claims the firm completely failed to detect millions of dollars in theft and fraud by that charity's own finance director, happening over many, many years. So the reason the source brings this up is to challenge that main counterargument, the idea that a clean audit means everything is automatically fine. It raises the question, maybe a clean audit isn't a guarantee. It suggests that even with professional auditors looking at the books, some pretty huge problems could still slip through the cracks. The analyst then draws this interesting parallel to a famous story about Warren Buffett. Apparently, back in the 70s, Buffett's own lawyer looked at this complicated chart of all his interconnected companies and said something like, I don't know, even if everything here is legal, the structure itself just looks suspicious. There's got to be an indictment in there somewhere. And the source points to this money trail from 2023 as a perfect example of that kind of complexity. Check this out. Over $660,000 was transferred from Turning Point USA, which is a 501c3 charity that can't do direct political stuff, over to Turning Point Action, a 501c4. Then, almost the exact same amount of money gets moved again, this time to their Political Action Committee, or PAC, which can do political work. The argument from the source is that this whole thing looks an awful lot like a workaround to use charitable donations for political activities. So let's just pull all this together and recap the big red flags that the source lays out. First, you've got the missing documents. 3 out of 4 of those crucial tax forms are just gone. Then you've got the untraceable money, that massive $8.5 million transfer. You've got the weird accounting paradoxes, right? Like a company with 0 employees, but millions in salary expenses. And finally, you have some serious questions being raised about the independent auditor itself. When you stack all of those things up, they form the core of the investigation's concerns. And really, when you look at all of these pieces, the missing forms, the paradoxes, the questions, it all circles back to one huge central mystery at the heart of this entire report. Where did that $8.6 million actually go?